Hello traders, how are you? Hope you are great. Hope you are doing great. Welcome to our YouTube channel. This is Emeka coming to you live as other times to explain to you the secrets on how you can be able to excel in the business of forex trading. All right. Before we continue, I would like to ask that you kindly please subscribe to our channel, like our videos, and also share our videos with your friends. And always know that our goal is to provide you with the things you need, the secrets you need to be able to excel. We want to help thousands of upcoming traders to succeed. Okay, I have that vision to help thousands of upcoming traders to excel and to succeed in the forex market. All right, you can do it. If others can make, if others are doing it, if others can succeed, you also can succeed. So I want to be your mentor. I want to explain. I want to be able to share all I've learned over the years of being successful as a forex trader. All right, now actually this is a video we are looking at, and the video will be actually talking about a very vital and important subject. All right, we'll be talking about a very important subject, and this is very vital in your profitability. All right, have you wondered how some people cash a very high risk to reward ratio? Some cash a risk to reward ratio of 1:10, 1:20, 1:50. In fact, even 1:80. All right, several of my trades I have done 1:10, 1:20 risk to reward. And when you have a good risk to reward ratio, it will be profitable. If you lose 3 trades in a row, or even 4 or even 5 trades in a row, and you have a winning trade of 1:5 or 1:10, I tell you, it will cancel all your losses and make you to have some profit. All right, so that is why you need to learn how to refine your entries. The way you can get high risk to reward ratio in your trade while trading demand and supply zone is to learn how to refine your entries. All right, you need to learn how to refine your entries. Now I'll be explaining how to do that in this video. All right, if you are trading demand and supply zone without refining your entry, your risk to reward ratio will be low. All right, so this is a GBP USD. This is GBP USD. Currently GBP USD is in a downtrend. Okay, how do I know? You see, this is a GBP USD. Now we are having the market was in an uptrend. We were having break of structure to the upside continually. All right, until price failed to make we're having higher highs and higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, until price failed to break this high. Instead, what did price do? Price actually failed to break this high, and then what did price do? Price break this low. All right, price actually broke this low, and then indicating a change of character. And then since then we have been on a downtrend. This is a daily time frame. We have been on a downtrend for a long time. In fact, when did we get into, let me see when we actually got into a downtrend. When did we started trading GBP USD got into a downtrend from around June 2021. GBP USD started coming down, trading down, and we are still on a higher time frame downtrend on GBP USD. All right, so we are on a downtrend on GBP USD. So okay, if I should put my trend line here, you will see that we are on a downtrend on GBP USD. You don't even need this trend line to know. You just need to see that we can see that we have been having a break of structure to the downside. Look at break of structure to the downside. All right, break of structure to the downside. Okay, break of structure to the downside. All right, and also break of structure to the downside. Right, so we are having GBP USD have been breaking structure to the downside, and there is a higher time frame sell. All right, we have been in a downtrend for over a year, for close to a year on GBP USD, and to me, I believe GBP USD is actually coming down, is headed to this demand zone, is headed to this daily demand zone. Actually, what we will likely see in the coming week or in the coming months is price actually coming to mitigate this this supply zone. All right, this is what we will likely see. We'll likely see price coming to mitigate this supply zone, and then we'll likely now have a break of structure down to this daily demand zone. Okay, this is what I'm anticipating on GBP USD. Price is on a temporary sell buy right now, so it's likely to go and mitigate this unmitigated daily demand supply zone, and before it now breaks down with a strong momentum to the downside to the daily demand zone. All right, this is what I am seeing for GBP USD. All right, now this is not really why I actually this is not actually the topic of today. Okay, if you want to learn more about all this break of structure and all the rest of that, I've made videos on break of structure. I've made videos on a change of character. This is a change of character. All right, this is change of character showing a change in trend. All right, so the market was moving on an uptrend, breaking structure to the upside, and now there's a change of character. Price failed to make a new high, breaking the last low, and then the price continued to mitigate others to the downside, and then we are still on a downtrend since over a year now. All right, since 2021. Okay, from here since 2021 we have been on a downtrend on GBP USD, and I believe that GBP USD is supposed to is looking for a mitigation of this other block or demand or supply zone before it will come for a strong momentum to the downside. Or it could also, there's also a possibility that GBP USD might still can use this structure as a liquidity, and rather go up here before it would now blast down to this the demand zone, this higher time frame demand zone. I strongly believe that price is headed to this demand zone. All right, is coming to the demand zone, but it is currently looking for some mitigation before it will now engage in a strong momentum down. All right, so now let's get into the topic of today. Now we want to look at demand zones and how to refine your entries for demand zone. Now this is a demand zone. This is a higher time frame demand zone. In fact, this is a daily demand zone actually. All right, this is a daily demand zone. All right, now if price was, let me erase this so you can get it clearly. If price was like this and you saw a demand, this is a rally base drop demand supply zone. Sorry, we are not on a demand, we are in a supply zone. This is a supply zone, a rally base drop supply zone. All right, now let's say you wake up, or you wake up and look at your chart, and this is a zone, and you intend that when price comes to mitigate this zone, you want to get in on a sell. All right, okay, now you want to get in on a sell. Now you just move, you mark this point as your point of interest. All right, you mark this point as your point of interest. Okay, now if you should, let's see, this is if you are not going to mitigate if you are not going to refine your entry, if you are not going to be refining your entry, you are looking at getting in from here, and selling down here. All right, okay, this was actually the zone we are looking at. This was our supply zone, which we intend that price should come to mitigate and now sell down. Right now, if you are not going to be using a confirmation entry, this is gonna be your entry. and this is going to be your stop loss. All right, this is going to be your stop loss, this is going to be your entry. So now and this is supposed to be your take profit. This is supposed to be your take profit. This is also your take profit. This is your entry for a sell. This is, you place your stop loss slightly above the zone, and then expect that price comes down to this point. All right, so now what's going to be your risk to reward ratio? Let's see how many pips stop loss. This is about 90. Is it 90? Let's see. This is about okay, let's say 100 pips, approximately 100 pips, 103, 100 pips stop loss. All right, 100 pips stop loss. And now what's going to be our take profit? Our take profit would be here, which is about 257, or let's just say 250 pips. 100 pips stop loss. Okay, 100 pips stop loss and 250 pips take profit. All right, now let us see what is going to be our risk to reward ratio. 250 pips take profit and 100 pips stop loss. We are having 2 to 2.5 1 is to 2.5 risk to reward ratio. 1 is to 2.5 risk to reward ratio. And this entire movement could have taken can take you, this is a daily time frame, this entire movement could have taken like up to, let's say it can take up to a month. Okay, this can take up to 2 weeks or 1 week or a month, depending on the market momentum, to be able to make this movement, to give you 1 is to 2.5 risk to reward ratio. But what if we are to refine our entries by using confirmation entry? What if we are to refine our entries? Now, this is how you're going to refine your entries and get entry confirmation, because actually the conventional supply demand and supply trader would just place a buy limit here, a sell limit here, so that when price comes here, it's a sell limit here at the entrance of the zone or 50% into the zone, so that when price comes here, taps into the sell limit, it will activate and then sell off. All right, okay. Sometimes why this the two reasons why two reasons that the confirmation entry supersedes or is better than the limit entry is because, number one, the confirmation entry helps you, has a higher risk to reward ratio, and also it has a higher win rate, because you are not just hoping that price comes to tap your zone and then sell off. You are hoping that price would actually you are actually hoping that you are seeing signs of reversal. By confirmation, you are seeing signs of reversal before you now get into the trade. All right, and also you are by refining your entry, you will be getting a higher risk to reward ratio. Okay, you can see now we have a 1 is to 2.5 risk to reward ratio by this what I just showed you now. If you are taking just limit entry from the zone, all right, and taking the D1 supply zone as your stop loss, all right, if you are taking the entire of it as your stop loss, all right. So this is on confirmation, this is not the confirmation entry. All right, so now let me show you how, if I'm to enter this trade now on a confirmation entry, what am I going to do? I'm going to step down. I'll mark up this chart right here, all right, just as it is marked here. I'll mark it up right here, and I'll be waiting for price to come to this zone. This is the zone, this supply zone, and we are waiting for price to come to this zone. When price comes into this zone, now I have to step down to a lower time frame. If I'm using D1 time frame as my zone, as my point of interest zone, I'll be using 1 hour time frame as my entry confirmation zone. If I'm using that is for day traders or swing traders. But if I'm that is for swing traders. But if I'm a day trader and I don't want to hold my trade for long, I want to close my trade the same day, or a scalper, just a day trader, what will I do? I would actually be looking to trade the H1 zones and using 5 minutes as my confirmation entry zones, lower time frame confirmation entry zones. If I'm a scalper, I would use perhaps 15 minutes will be my higher time frame. 15 minutes will be my higher time frame, 15 minutes zone will be my higher time frame zone, while 1 minute will be my entry confirmation zone. Let me repeat again. If I am a day trade, if I'm a swinger, I could use the D1 daily time frame as my point of interest zone, whereby the 1 hour chart will not be my confirmation entry chart. If I am a day trader, I can use H1 chart point of interest as, or H4, the 4 hour or 1 hour chart as my point of interest zones, while I will now get my confirmation entry for my 5 minutes chart. All right. But if I'm a scalper, or sometimes also day trader, I can use my 15 minutes as my point of interest zone, 15 minutes zone as my point of interest zone, and 1 hour 1 minute chart as my confirmation entry chart. But for this purpose of this video, we are using our D1 chart, D1 point of interest zone, and H1 as our confirmation entry chart. All right, so I've shown you this. We are currently on a D1 or daily time frame, and I've shown you the zone, and we have seen that we are able to get 2.5 1:2.5 risk to reward ratio, which is small. So now if we are to enter this trade on a confirmation entry, we have to step down to 1 hour chart. Let's step down to 1 hour chart. Right now, on a 1 hour chart, let us identify the zone. Okay, this is the zone. All right, yeah, this is the zone. Okay, 1 hour zone, the D1 zone, but on a 1 hour chart. Now what are we gonna be? Is this, let's see. Okay, sorry, this is the zone actually, because we marked it. This is the zone, this is the D1 zone, now on a 1 hour time frame. So now we wait for price to come into the zone. All right, wait for price to come into the zone. Let's just move this arrow slightly. All right, now when price here, you can see that price actually came into the zone here, right here. Tap into the zone. Okay, price tapped into the zone right here. All right, price tapped into the zone right here. Okay, price tapped into the zone right here, or here. You can use any of these. All right, now when price actually tapped into the zone, you would wait for a break of structure. Okay, price tapped into the zone. The market was moving in an upward direction. The market was moving up, creating higher highs and higher lows, came into the D1 supply zone. And now when price came in there, we stepped down to a lower time frame in order to get our confirmation entry. Now our confirmation actually is a change of character. If you don't know what a change of character is, look at, I'll be putting the link to the description box, the link to our video on change of character, break of structure, and market structure in the description box of this video. So you're going to look at it and learn more from it. All right, now this is actually a break of structure, because the market actually was creating higher highs. The market was actually creating higher highs and higher low, higher highs and higher low, yes, higher highs and higher lows here. And at this point, the market failed to create. The market also created another high highs, but failed to break it. Failed to actually break it up. What did market do? Market now got into our D1 supply zone and now broke structure, creating a change of character. Once this happened, this is our confirmation that the market is about to do what? To sell, or the market is about to reverse trend. So we would mark this zone. We would mark this zone that actually, let me erase the okay, now we'll mark this zone. We'll mark this zone right here that actually caused the break of structure. All right, we'll mark this zone that actually caused the flip from supply to demand, or that caused the change of character. So when we mark this zone, what do? We now wait for price to come into the zone. All right, wait for price to come into the zone. So wait for price to come into the zone, perhaps 50% into the zone. All right, this is like 50% into the zone. So now we get in right here, you can get in at the entrance of the zone or 50% into the zone. All right, and you place your stop loss. You place your stop loss just slightly above the zone. All right, slightly above the zone. All right, so like this, just slightly above the zone. Okay, and now how many pips would this be? This would be about 200. It's not 200, sorry, about 24 pips. It's about 24 pips. Okay, 24 pips stop loss, 24 pips stop loss, and this is our take profit. Come down right here. Okay, come down right here. 24 pips stop loss to 250 or 260 take profit pips. Okay, so what risk to reward would that be now? What risk to reward would that be? We'll be having about 1:100. All right, wait. Oh, sorry, we'll be having about, this will be about 1:10. Okay, sorry, 1:10. 1:10 risk to reward ratio approximately, because we have refined our entries. 1:10 risk to reward ratio. Okay, we are taking profit the same place in the daily time frame. The daily time frame structure, we are taking profit at the daily time frame structure for our final profit, and you see we are having 1:10 risk to reward ratio because we actually refined our entry. Now let's do one more example. Okay, let's do one more example right here. Okay, let's delete all of this and do another example. Let's do another example so that it would actually sink down. Okay, now the example now would be this. Okay, this is another example. All right. Okay, so this is our another supply zone. All right, this is another supply zone, and this, okay, let's remove this so that we can see clearly. Let's remove this so we see clearly. Okay, now see. Okay, now this is our supply zone. All right, so and we're looking for price to come into the zone, and sell. So if I'm to trade the daily time frame without actually going down to the lower time frame to get some entry confirmations, this will be my entry just at the entry of the zone or the middle of the zone, and now my stop loss will be above the zone. All right, this will be my stop loss. Now let's see how many pips stop loss that would be. This would be about 130 pips. Okay, 130 pips stop loss, approximately 130 pips stop loss, and your take profit, the take profit would be about 370 pips. Okay, 130 pips stop loss, 370 pips take profit. Okay, 130 pips stop loss and 370 pips take profit. That is about 1:2.8. 1:2.8, almost 1:3, 1:2.8. So if you are trading the higher time frame, if you are not actually refining your entries, you'll be having approximately 1:3 approximately final TP targets. 1:3 on the average, 1:2.5 to 1:3. In the earlier example we gave, we had 1:2.5 risk to reward ratio when we did not refine, and when we refined our entry, we had a risk to reward ratio of 1:10. But in this case now, we are having a risk to reward ratio of 1:2.8. All right, now let us refine our entries. Okay, let's refine our entries. Let's go down to lower time frame. Let's go to H1 and see what the market has for us. Okay, yeah, this is it. Perfect. Now you see the market was coming up and now came into our zone, and we actually wait for a break of structure to the downside or a change of character. So that happened somewhere around here. Okay, there was a break of structure right here, and you can see this low was broken by a few pips, like 1 or 2 pips broken down, and now our entry We now wait for price to come back to mitigate the supply zone that broke structure, or that caused a flip, or that caused a change of character. We wait for price to come. I want to delete the higher time frame. This is actually our D1 zone. This is our D1 zone, and now this is our H1 zone, which we're going to be waiting for price to come into. We call that return to order block. All right, this is the return to order block. And when price actually comes back to your order block that has been mitigated, that has been broken, all right, that was a flip. So this is now we are waiting for price to return to the order block. All right, so now let's just remove the, okay, let's leave it there, the D1, the H1 supply zone. Okay, let's mark it out and see how many pips. Let's remove this this one, make it clearer. So just slightly, our stop loss will be slightly above the zone, slightly above the zone, and this is going to be our entry somewhere here, or at the middle of the zone, or let's use the entry at the entry of the zone as our stop loss margin. Now how many pips stop loss are we going to have? Let's see. We've just had about 200, not 200 now, 26 pips stop loss. All right, 26 pips stop loss, 26 pips stop loss we just had. Now let us see the take profit, because our take profit will be somewhere around here. Somewhere around here will be our take profit. All right, using the D1 market structure. Now our take profit, let us calculate our take profit. We just calculated a 26 pips stop loss. Take profit, how many pips? Take profit, we're having about 295 approximately, 295 pips take profit, 295 pips take profit. Now let us see the risk to reward ratio. Okay, 295 pips and 26 pips, 295 pips take profit, 26 pips stop loss. So we just had 1:11. 1:11 risk to reward ratio. 1:11 risk to reward ratio. Isn't that wonderful? 1:11 risk to reward ratio. 1:11 risk to reward ratio. So we have been able to gain extra 9 hours from 1:2.8 risk to reward ratio on the daily time frame. We are able to gain more risk to reward ratio by means of the use of refining our entries. Okay, this is the magic, or not just the magic, is the wonder. This is the wonder of entry confirmation and refining of your entries. This is a wonder. This is one of the most important subjects in smart money trading. This is one of the most important subjects in smart money trading and advanced demand and supply trading. Okay, so I've just given you for free. This is a mentorship a course I've just given you for free. Okay, so how do you pay back? You pay me back. You pay back by subscribing to this channel, because more concepts are coming. More concepts will be coming your way, more important concepts that people pay thousands of dollars to learn. Okay, people pay thousands of dollars to learn these concepts. All right, people pay thousands of dollars to learn this concept. I'm giving you for free on my channel. All right, and I'll be bringing more of such videos. How do you pay? You pay by subscribing to our channel and also liking our videos, share our videos with your friends, and also if you need one-on-one mentorship program, one-on-one mentorship with me. Okay, I don't do mass mentorship, no, because I believe that every individual has a learning curve which is different. Every individual has assimilates things differently. So that is why I teach and I mentor individually, so that I take it at your own pace. Okay, some persons enrolled in my mentorship program and they are able to round up the course in 1 month. Some persons that are faster in 2 weeks, and some persons that are faster, that are not very fast in assimilating in about 3 months. Okay, so I take it at your own pace. So if you want to get mentored by me personally, so you can become a very profitable trader, there are many jargons out there in the market, many jargons on YouTube. All right, I don't believe in those. So if you want to be mentored by me to learn this concept and become a profitable trader, the link to you chat me up on Telegram. The link to my Telegram group is in the description box of this video, and also the link to my Telegram contact is in the description box of this video. All right, send me a DM and we'll start up a one-on-one mentorship training, and I believe you will be very good in this business. Your life will change, your trading career will change from struggling trader to profitable trader. All right, so until next video, I want to wish you a happy trading, success in your trading career, and I believe that you have what it takes to be a successful trader. Thank you and remain blessed.